Hi everyone, welcome to another Sharewise webinar. Today I am joined by Carly Car Subscription, listed on the ASX as CL8. And we have here Chris Noone, the CEO and Executive Director. Thank you so much for joining me today, Chris.
Okay, great to be here.
So today we'll do a Q&A with Chris. So for those that are joining us live, please feel free to submit your questions in the Q&A box below. But I'll get us started. So Chris, for those that aren't familiar with the company, could you just give us a rundown of the business model and what exactly it is that you do?
So we offer car subscription. We like to say that it's better than a rental and shorter than a lease. And what we mean by that is that we sit in terms of average subscription period right between rental and longer forms of purchase like loan, lease, and purchasing for cash. So our average subscription period is 5 months. If you compare that to a normal rental proposition, average rental periods for cars are 7 to 14 days, and a lease or a loan is 2 years or more. So at that 5 months average subscription period, we really fit into quite a big niche between those quite large industry providers. And we're one of very few firms that are offering a car subscription market in the Australian context, but also we're one of the companies that are offering car subscription. There are very, very few that are 100% focused on car subscription. Many of them are distracted by offering rental businesses, renting cars to Uber drivers, and also buying and selling cars as well. But what we do is 100% car subscription.
Okay. And so how big is your fleet of cars?
We have over 500 vehicles at the moment, and it's continuing to grow.
And is that, do you operate across all of Australia?
So we're mainly focused on the east coast of Australia. We've got handover locations in Sydney, Melbourne, and Brisbane with multiple outlets, but we're a virtual business. So wherever we have supply of vehicles in the country, we can be operational. We don't always need to have people on the ground in those areas. And many of our corporate clients, for instance, are using our vehicles in regional areas where we're not physically present, but we're able to organise that either with our own vehicles or working with our partners who provide vehicles. And those partners could include automotive dealers and also manufacturers who are located in those areas and can provide those vehicles for us.
So those partners that provide the vehicles, who bears the liability of the vehicles? Is it Carly Car or still that company?
So we take responsibility for the whole transaction. So we acquire the customer, we take them through some quite stringent verification checks, and this includes both individuals and businesses. We provide the insurance for the vehicle, we collect all the payments, and we manage compliance with all the terms and conditions. So any large provider of vehicles that provides vehicles to us, we will take responsibility for them for generating revenue, but also ensuring that the vehicle is returned in good condition. And it's probably worthwhile explaining, with our fleet, we have two different models. One is asset heavy, one is asset light. So asset heavy is where we own the vehicle and we're 100% in control of that vehicle. Asset light is where the likes of Hyundai, other automotive manufacturers and automotive dealers provide us vehicles to monetize on their behalf. And that way we have access to two different pools of stock within the market, some that we have a long-term commitment to, others we have a shorter-term commitment.
So what's the commercial agreement between the asset light? Is it like a commission from every subscription?
So what we do is pay an owner rate, which is an amount of money that's paid for each day that the vehicle is subscribed. So we're incentivized to get the maximum utilization of those vehicles so that those owners are using maximum revenue. There are a number of advantages for those owners, such as manufacturers and dealers providing vehicles. Not only do they get revenue, they're exposing their vehicles to new customers. They're also generating used car stock as well, which can be quite predictable. So they might put a vehicle into our fleet and then 12 months later, they know that vehicle will come back in good condition with a certain number of kilometres on it, and they'll be able to feed their used car channels.
Right, okay. And so for the asset heavy, logistically, where does the customer actually pick the car up from? Do you guys have actual...
Yeah, so we do have our own Yeah, we do have our own handover locations. So in Sydney, Melbourne, and Brisbane, we're
Mhm.
close to the airports in each of those areas. And
Okay.
then with a number of our other providers, such as automotive dealers, we're located on their premises. So that's how we can be geographically dispersed without having high operational costs. We don't always need to have our own staff, and we don't need our own real estate either in order to operate in a certain area.
Okay. And I know you touched on this earlier in terms of your competitors, not one is 100% subscription focused, but how would you say your market share is in the whole market?
It's probably a little bit difficult to determine. We're the only ASX listed company that's focused on car subscription.
Mhm.
All of the other companies are relatively small and private. It's very difficult to get an understanding of the size of their fleets, but I would believe we're certainly in the top three in the country.
Okay. And let's dive a bit into financials. So I know you guys have grown quite rapidly. How has this been achieved?
We've been 100% focused on growing the fleet of vehicles.
Hmm.
So what we've found in the past is we have an excess of demand over supply. So we've had a very strong focus over the last 12 months or so in growing the fleet of vehicles, and we're growing both the asset light and the asset heavy fleets as the demand continues to grow in the market. We've also been quite focused on marketing as well. So we acquire a lot of our customers through digital channels, Google and Facebook, but we also have a number of referral relationships for both consumers and also business customers, and they're working quite well for us. So in terms of growth, in the last March quarter, we grew 58% year on year, off a fleet size growth of 73%. And in that time, with that growth, we've decreased our advertising and marketing costs by 12% as well.
Okay. And how many subscriptions would you say active subscriptions you have approximately at a time?
It's certainly in the hundreds, and it's growing quite quickly. One of the key metrics that we use in the business is utilization rate. So we want to ensure that the maximum number of cars that are in our fleet are on the road generating income. So that's how we really measure the business, is on that utilization rate.
Okay. Um, and what happens if a customer wants to change the car?
So we offer a switch option, which many companies don't offer. So each customer is able to switch the car once or twice per month, depending on the subscription plan they've signed up to. And this enables the customer, both business and consumer, to choose the car that's right for their needs now. And if their needs change, they can change to a different type of vehicle. So it might mean that a certain part of the year they need a bigger vehicle, or they might want to save money in a certain part of the year. So it gives them that ultimate flexibility to always ensure that the money they're paying for the vehicle is proportionate to the type of vehicle they're receiving, but also that that vehicle is meeting their exact needs at that point in time.
And what happens if a customer damages the car?
So we've got
What
some
are
very, well-honed processes in that. We've been in business for over 10 years.
Mm,
So we know how to manage that with the customer. They are responsible for the damage, but we also have insurance as well. So
yeah.
there is an insurance excess and different rates of excess depending upon the subscription plan that the customer chooses. But ultimately, the customer is responsible for the vehicle. Either the insurance will step in, or the customer will be responsible for the repairs for up to the value of that excess.
Okay. Um, and we have a question submitted here. A lot has been happening in the automotive market with supply issues, cost of living pressures, and the transition to electric vehicles. Does Carly see these as opportunities or challenges?
So the market has been very dynamic, especially since COVID. So I'll take you on a little bit of a journey to explain the challenges that we've been dealing with. During COVID, there was a massive restriction on the supply of cars. As factories shut down, prices went up. So at that time, we focused on getting our own finance for vehicles, and we secured a $10 million asset finance facility, which we've been deploying to purchase our own vehicles to feed the growth of the business. We've also seen that, more recently, a lot of talk of cost of living pressures and, potential for recession as well. no matter how the economy is performing, we feel that we've got a really good story to tell and a really good product proposition. If the economy is growing strongly, we support the growth of those individuals and businesses who need vehicles quickly. Businesses might need to rapidly scale up sales teams. They might be launching new products, taking on new projects. So we can supply those medium-term vehicles for them. For the consumer as well, they'll have a bit more access to cash and we'll be able to try different types of vehicles.
Yeah.
On the other side, if the economy looks like it's declining, a lot of people and businesses will be focused on managing their risk and decreasing their risk. So at the time where it might be recessionary fears, people and businesses are less likely to take out loans. So therefore, taking out a subscription gives them that flexibility. They get the car that's right for them now, and they can return it with 30 days notice if their circumstances change.
Okay. And speaking of electric vehicles, do you guys have many in the fleet?
Yes, we actually only purchased our first electric vehicles in December last year. We were watching what's happening in the market and around the world, and a number of companies that went very hard very early into electric vehicles really got their fingers burnt. There were very high costs for those vehicles, and there was substantial depreciation, and they found that the residual values for those vehicles after a couple of years were not anything compared to their internal combustion engine vehicles, and a lot of companies showed losses. So we stood back, watched those companies focus on getting press releases. We were focused on operational efficiency and also profitability. So we entered the electric market when we saw prices moderate. We're seeing 5-star ANCAP rated vehicles with 7-year warranties available for $40,000 now. So that's when we entered the market. And we also see a great role for Carly to play in the transition to electric vehicles because there's a lot of confusion in the market. A lot of individuals and businesses are thinking that they should buy an electric vehicle, but they have 1,000 questions. They don't know whether the vehicle will be right for them. They've got concerns over charging, over range anxiety, over cost, over operation of the vehicle. Lots of different anxieties and concerns. So what we did was launch a product called EV Trial in March of this year. And this is a product that allows individuals and businesses to try an electric vehicle before they buy. So our focus is on providing them with the opportunity to learn about electric vehicles by actually driving it day in, day out for a number of months. Once they do that, they can actually answer the question, should I buy an electric car? With confidence and knowing that that answer is based on their real life experience, because each person and each business's needs are very different.
Yeah.
And the way that electric vehicles meet those needs is also very different. So we want to put the power in the consumer's hands so that they can make informed decisions about buying or leasing electric vehicles.
What's the current revenue split between businesses and individuals?
At the moment, it's majority consumer, but a lot of the growth is coming from corporate, and a lot of that's been driven by the strong referral relationships that we have within the market.
Okay. And we have another question submitted from a viewer. The biggest fleet of all time for Carly, yet the market cap is now 3 mil. What can you do to generate cash flow positively and some shareholder value? Does the board have any aspiration to get the 6-cent options over the line, and when will we see some progress?
Certainly the 6-cent options are a big focus for us. We have to lay the foundations for growth. We've been growing the fleet. We've also been launching new products such as EV Trial. We also have the Carly Now product, which allows automotive dealers to sign up subscribers in their own dealership for their own vehicles, is also in the market. We're also expanding our advertising and marketing, and we also have more referral relationships coming on board as well. So our focus is still very much on growth. Yes, there is some pressure on the share price, especially towards the end of the financial year, and we're seeing this with a number of small cap companies, but we're still very focused on our strategy and think that we've got the right strategy, being a blend of internal combustion engine vehicles, which are still in very high demand, and also moving into the electric vehicle market as well. And we're managing our risk by actually owning our own fleet, but also having access to that asset light fleet and very much clipping the ticket of other parties that are wanting to enter the subscription market.
Right. Okay. Well, with that being said, we'll end it here. But thank you so much, Chris, for joining me today. For those that are watching, we will upload this to YouTube if you'd like to refer back to it.
Thanks, Caitlin.